Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours, and that you got your sweat on, great breakfast, spent some time with loved ones. Let's dive into this cryptocurrency capitulation, realistic low for cryptocurrencies. Things are coming to fruition based on our analysis of the facts and the data on the charts, something we've been covering forever now on the channel, and we've been looking at specific timeframes and price ranges, the holy grail, the bottoms and when, on this channel for quite some time. If you have been around that entire time, smash up the like button. If you haven't, make sure you hit that subscribe button with the bell notification icon. Thanks to all of your comments down below in the comment section, and to the guys that popped in on Saturday to our Phuket meetup. Lovely to meet you all. A quick shout out to my Instagram as well, because I have a crypto Q&A going on over there, over in story. So make sure you go and follow me over on Instagram and drop your questions there. Next 24 hours, boom, let's go on there, and you'll see some family pics. And Bybit still has 0% fees on all spot trading pairs. Use the link in the top of the video description for up to $4,500 of sign-up bonuses when you use that link down there. Let's crack on with the analysis here. Bitcoin, we had confirmed reversal signals come in over the last month and a half. We've seen them play out time and time again, and then we had our critical endangered levels for the chart, especially when we saw the reversal signals play out. Now, it's not all doom, fear, despair. There is a lot of good that I see coming from the market this week, and of course in the next, I would say, couple of months as well. You know, we've been looking at our cycle low, which I'll look at on the macro chart, but for the short-term stuff, we're getting very close to that $18,600 level, and the previous low on the 7th of September was at $18,527. Now, maybe by the time this video goes up, it's broken through or we've had a bounce, but either way, this is looking very, very weak. Following on from the danger signal analysis that we had over the weekend, we saw that little rise up. We didn't get close to the 20,700 level. It was much weaker than anticipated, which is why I think we'll probably see a breakdown of 18.6. We had the double bottom signal here. This is from June to this low. Now, what a lot of people will look at is, well, this is a double bottom and it started to make a move out. The move actually failed. Now, this is pro tips from trading analysis. When a significant signal like that fails, it usually means the opposite is bound to happen. There are no 100% probability. So hear that now. There's no 100% guarantees in trading or investing. But when you get a signal like this, double bottom, any particular major signal like that, fail, you can see the breakdown here, and once this goes beneath that bottom level, that is a failure of the double bottom. That usually means you're going to see lower prices, significantly lower prices than this current low. Now, significant in terms of what? Relation to what? Just in relation to this move here, all right? I don't think it's going to be significant in relation to the entire down move that we've had. Now that we scroll the chart out, you can see that this little pump up is not really much in the grand scheme of things. However, you know, we always pay very, very, very close attention to what the market sentiment is doing. And the market sentiment is fearful. So the drop down in price may not be that much. Maybe it goes to 13, 14, 15, 16. But in terms of the emotion, it will be extreme. People will feel really, really bad about the move down. But when you look at it in terms of a dollar value, mate, we've seen way bigger dollar value moves on the way down. Now, I'm not expecting anything like this or like this to play out. That is what the feeling will be. So pay attention now that if we get this move down, the good news, the hopium, buy the effing dip. Buy the effing dip, all right? The fear is very hard to buy on, but think about where we were in early 2021. We're up at these top levels. This felt easier to buy in, but it was not the best time to be buying. Altcoins, sure, they pop off for a few months, maybe 12 months, and then it's all over, right? Bitcoin, you're not really getting any sort of return through 2021. But remember, the lows are the hardest times. Emotionally speaking, they're the hardest times to be buying. Personally, this is my buy zone. There's no ifs, maybes, buts. I'm telling you, this is my buy zone. Under that $19,500 level is my buy zone. We've looked at this many, many times for months now. In February, I had the 4-year cycle video come out. The market was starting to pump up. People thought that it was a new Bitcoin all-time high coming up, get some higher values here, but it was, of course, it was the merge blow off top. It was the Bitcoin conference in Miami top. It was just all hot air, as we have seen recently as well with the ETH merge hot air as well. My buy zone is within this area here, and I've posted this on the channel many times now. I like the area between the 11 and 19,500 dollar zone. Eventually we'll get a break to the upside of the bear market. Maybe it's down here and a break above. And these are all just major checklist items saying bears are now being flipped by the bulls. That has to happen at lows in extreme fear. It has to happen at those times. It can't happen the other way around, because then it would be bulls flipping to bears. See how this thing works. So this extreme low level, this crypto capitulation, where does the low come in? This is another thing we've been tracking, okay? The previous cycle, 14 months down, this was 2013 to 2015. Then we had 2017 to 2018, so 12 months. 14, 12, the average is 13 months. So the second low that comes into the market is this yellow line, all right? So that came in this first cycle, 21 months, and the next low came in at 27 months. So the average of these two is, of course, 24 months. Where does that leave us now? Well, if we look at around 13 months, it's going to be December 2022. Doesn't mean it has to happen at the average. Maybe it happens at the previous cycle of 12 months. Maybe it happens slightly earlier at 11 months. All right, but we're getting very close to that point now, and I've been persistent about this since the beginning of 2022. Just go back on the channel, make sure you are subscribed, bell notification icon. The main thing I want people to do, and this is the #1 rule in investing, is don't lose money. The #1 rule isn't let's make money, it's don't lose money, because it takes many years to get the feel and the understanding of how to make money. And if you can survive those first few years, then you have a far greater potential and probability of making it to then go and make that money that you hold for long term, rather than just maybe make a few bucks in the pump of the altcoin season and piss off somewhere else. So the #1 rule, don't lose money. The #1 rule on YouTube, crypto Twitter is buy the 100x altcoins. That, of course, is why people always fail, because that's what they look for. That is pretty much the known reason why people will fail. All right, so 11 months after my little rant there, I want people to succeed and continue to make money in the market, at least save it, don't lose, then make it. All right, so what we're looking at here is the 11 months, potentially the 10 months, which is what we're currently in. This is September. Like I said earlier in the video, if we drop into the low this week, it would make for reasonable timing overall, slightly earlier than usual because people are expecting it. You could argue that the first one was 14 months, then 12 months, maybe it's 10 months this time. This is the maybe stuff. Like I said earlier, my no ifs, no buts, no maybes is my cycle buy zone. The timing is coming into that point. The pricing is coming into that point. Maybe it's $14,000, $15,000, $16,000. Either way, it's not going to matter when the market pumps right back up to $50,000, $60,000, $100,000. You wouldn't care if you were buying through the zone in 2019 or a little bit earlier, later in late 2019, early 2020. You just want to be making those big gains. So 10 months is September. We have the Fed meeting this week talking about raising interest rates. Maybe that's a big fear, final capitulation point where the markets just drop out of bed. For GAN lovers, GAN analysts, we have the GAN seasonal date coming up this week, which is also very important, especially when it's coupled together with other news announcements. And that is what we're expecting for September. If not, maybe we get a little drop into early part of October. But some time away this week is the first date points to look at, and the market is giving us that opportunity within the DCA zone for Bitcoin, not cryptos. Let's take a look at ETH and also cryptocurrencies for that final capitulation zone that I'm expecting. And for cryptos, I think it's still some time away. Remember what that #1 rule is: don't lose money. And that is, for me, do not be DCAing into cryptocurrencies while the market is still down, because a lot of these cryptos will not make it through the next cycle. 99% of these things will probably end up being absolute trash and people will have lost a lot of money. Don't lose money. Ethereum is now down 19% for the last 3.5 days. Let's take a look at what's happened on the weekly chart. We've had a big drop down, again, just over the last 12 hours. 3 days we had a big drop. 12 hours we finally broke through that 50% level, which we've been watching. The merge hype has basically all but worn off. It's a distant memory now, which was last week, the merge hype for Ethereum. The breakdown, the danger signals here, which we've covered on the channel. So congratulations to you guys that have been following this and not getting caught up in the hype, buying the dips on all these sorts of things. Danger, if ETH breaks around this 1300 and these levels here, which are these tops, you can see them yourself, about 1280 and 1275, break under there. This is probably looking like a potential breakdown to the 3-digit ETH. So if I were still seeing the 4 digits, the 1000 to 1300, but if it grinds in this 1000 to 1300, probably going to see a little bit lower. The most difficult thing now is, of course, patience. Do we have the patience to hold on and wait, or are we going to get itchy fingers and start to hit that buy button because we think ETH is a great DCA opportunity? This might make you think otherwise. This is our ETH BTC chart. Macro resistance came into play. It worked perfectly. This was to also avoid the hype for DCA. Crypto trading, short term, maybe hourlies, maybe dailies, different story. Okay, put that to the other side. That is where you can make some good money short term. But if you're DCAing, you're looking for the longer term, months, maybe years ahead, then it is important to wait for the timing, not time in the market, timing the market, which is very simple to do, much easier than a lot of people make out, especially when you use simple tools that we talk about here on the channel and with our members in TIA Premium. 50% level, ETH BTC, the trend flipped to uncertain. That was at 7.2% because of our swing indicator here. So there's the swing indicator. Market is down. 50% is now at 6.7%. So let's get rid of this one here, clean up the chart a bit. The 50% level is a support resistance level. So at the moment, you can see the market is bouncing off that on the weekly chart. So we're just having a small bounce at the moment. If this happens to slice through, you can probably bet that we'll come back towards 5.9 to 6%. This is ETH BTC, remember? And if we don't hold this particular level, this yellow line right here, then we're going to drop back down into the longer grind zone, which is between 4.9 and 5.9%. So the major 50% is at 5.2. So in between that 5 and 6% level, you want to see ETH hold there and then start to form a base and grow higher. And that would be a potential dollar cost average signal for ETH USD. All right, so we've got to continue to check those charts, but for now, we still don't have any of those signals. We need to wait and see that. As I said, hopium, ETH is cooling off for further accumulation. So the cool off here, the price is now back down to where it was several weeks ago. And congratulations, pat yourself on the back. You didn't buy the merge FOMO. That was super, super clear. Though I saw a lot of channels talking about 2200 ETH, 2500 ETH. It's not priced in, etc., etc. You beat that. You deserve a pat on the back. Over to cryptocurrencies in this final capitulation. 900 billion, 920 billion. That was our total cryptocurrency market cap level. Basically, if it could hold that support, ideally 970 billion, and start to move higher, we would then think, well, cryptos are doing something different than they did last time. Unfortunately, they are not doing something different. It's rejected there at 50%, rejected here, back down under the 50%, back under the $900 billion level, back under the previous swing bottoms. This is weak. This is very weak on cryptos. I'm going to give you that final support, that final capitulation level again. This is a really key level, especially if you're looking to DCA into cryptos and not lose money. My macro bullish is all the way back up here. We'll look at that in just a sec. But the final support levels are roughly between 500 billion and this top price here at about 800 billion. So let's call it somewhere around 600-700 billion. We're not there yet. We need to see how the market reacts to the 500 to 700 billion dollar level. This is all the cryptocurrency market capitalizations. It's provided we get there, but that is going to be a key level for me if we break down from this particular low, which formed at the previous top. So this is the previous all-time high of all of cryptocurrency market caps, about 730 odd billion, and the low that came in June was at 760 billion. So the market is still showing signs of weakness overall for all of the cryptocurrency market caps, broken the 50% levels. The final capitulation is potentially just on the horizon now. It's breaking all of these other levels, and 800 billion is the next level to watch. So 760 to 800 billion. Market scoots into that zone. You can almost bet your bottom dollar we're going to drop into my final capitulation zone. Now, the importance of this level as an investor is that it gives us a signal that the market is almost at extreme blood. It doesn't give us a confirmation to be flipping straight into a bullish market, but at least it starts to remove all of the risk that the market still has a lot further to fall. This is on a case-by-case basis when you're looking at cryptos, but then by that stage, the market would be down a lot. From the peak to the current low is 74%. Now to these final points is about 82%. This includes all the cryptocurrency market caps. If we went for an extreme area of around 400 billion, then that's going to be an 87% drop down. What it did last time is about 88%. So just note that we've got a lot more money in stable coins now and more money in Bitcoin and ETH as well. So maybe we have slightly less than previously, but pretty much into that zone there is probably a good place to start looking, researching cryptos, and then wait for the confirmation for buyouts into altcoin seasons. Some cryptos are going to be weaker than others, so we really need to look for strong altcoins, especially with this capitulation. I'm going to go through this in future videos, so make sure you are subscribed to the channel, bell notification icon. I think this video is long enough, and this is a really important lesson to know which ones are going to move first over others so that you don't have money sitting on the sidelines just burning holes in your pockets and bank accounts. Something like ADA has bottomed first, but it's in a relatively weak position as these pumps have not been anything significant, especially with a hard fork coming up. I think ADA is still going to drop into that capitulation zone, which I've been talking about now for just under a year. And I'm looking between that sort of teens to mid 20-cent levels. This thing is not bouncing like one would hope, especially if you were a long-term hold. Let's wait and see. Not there yet. The signal is basically the breakdown of 38 cents. Same deal for Solana. I've been talking about lower prices. The low is trying to hold. If 29 bucks breaks, probably going straight to that June low around 26, and beneath that level, $19 and $12. This is all playing into those macro total cryptocurrency market caps, which is why I've got those levels further down. These are the charts that you need to be able to save you money and make you money. So make sure you are subscribed, bell notification icon. Catch you on Instagram. Go over there. I'll have a Q&A post up so you guys can ask questions as well. And don't forget Bybit, 10 million users on Bybit there. Nice strong exchange, 0% fees on all spot trading pairs. Thanks once again, guys. I'll see you at the next video. Until then, peace out.